All right, people, welcome to Udwe Market. Welcome, everybody, from wherever you are watching us from. Thank you for tuning in. This is the time when we make prediction. Right now, the market is about to open in about less than 2 hours. The market will open for the week. This is Sunday. So we want to make prediction of how the market will go. And remember, this is Urwe Market, where we show you by technical analysis what the market will do, what the market is about to do, what the market shall do. That's what Urwe Market does. And we are happy to be here with you. So welcome. Welcome. Grab whatever you want to grab, a cup of tea, a cup of coffee, your pen, your paper, your chart, and just follow us as we analyze the market for you. Grab water so that you can take a sip as we proceed. So, I think you should already have an idea how the market will play out. We've explained everything for gold. We've explained everything for BTC. We've shown you how the market will go. We've already told you how these things will play out. From the previous week, you can already see how the market should go because we have we've shown you our analysis, we've shown you how things will play out. Just for the sake of explaining it for next week, let us show you. You already know what we told you about BTC. Let's start with BTC. That BTC is selling. We explained this. Where is that video? Let me see. Okay, look at this video. Very interesting videos we uploaded today. Gold fell. This was our review video for today. Gold fell and rose this week. That is the week that ended today, exactly as we told you. There was a 99.9% accuracy in that prediction that we gave. Please go and watch it so that you see it for yourself. And on Bitcoin, there was a full 100% accuracy in the way we predicted. Go and watch this so that you can really see for yourself. So for Bitcoin, we can already see it going down, but what is the path it will take? Let's show you the trend. Let us show you the trend. What is the path? You know, we show you the road. We show you that Bitcoin will pass this road. It will bend at this corner. And look at it right here. There's a timeline waiting for BTC on Wednesday, as you can see. There is liquidity right under here. There's liquidity for the 6 months. There's liquidity for the yearly. And there is a timeline here, 6 months Fib ratio timeline. Remember, we flip our timeline. The ratio we use for Fib retracement, we apply that to timeline, just for you to know. And then for the last angle, we pick the last angle for our gun and flip it, and that's what you have it in the timeline there. So you have both the last angle in the timeline, the last angle in liquidity. Just have that in mind and you shall be good. You shall be good. You shall be good if you have that in mind. All right, so now let us see what we are about to do. Let's see what we are about to do, what we shall tell you how the market is going. Okay, so Tomorrow will be Monday. Next tomorrow will be Tuesday. Then on Wednesday the timeline will be met. Will BTC keep struggling here into this timeline, or will it drop further? If you look at the arc, will it drop further before that timeline? We already have a big vision for BTC and it has huge liquidity to sweep here. Go and watch this video so that you can understand it even better. Yes, I think it is this video, either this, how does the forex market move? I think it is this one. Yeah, it should be this one. Please go watch it so you can understand our analysis even better. BTC is trying to do something within this arc, but this is a little bit of consolidation before the downward move continues. All right, so have that in mind. Okay, so now that's what the arc is saying. Let's go to the arc that has the quarterly and the 6 months. Okay, look at it right here. This is the reason why it is consolidating, because it has gotten to the arc for the quarterly right here. This is where BTC has hooked and it's trying to use this as some support. If we'll show you the liquidity zone also clearly shows us why we believe it shouldn't be able to rise up here. And if it crosses into Wednesday and this arc is released, let me flip this arc, let me flip this chart so that you see. Remember, my goodness, what are we not showing you? Remember what we tell you about this location right here, this zone? When price gets here, let's do this. Whatever it does here, and then get into here. And then this arc is released. Now look at this arc. Now take note, I just flipped this so that you can see. This is the very same arc we expected gold to rise into. Look at this, people. Just look at this. Remember that we have mapped this out. We've explained it. We've shown you that, okay, this is a flipped chart. Good. Remember we explained that our target is to get gold into here and let this kick it up. All right, at the end of the quarter and the beginning of the new quarter, let gold be slapped up. That's what we'll tell you. Let gold be slapped up. So that is the same location you are seeing BTC eyeing. Where is that arc? Right there. Right there. In the case of BTC, it is the opposite. It is the bearish momentum that we foresee. Look at that. So it gets in here, guess what happens? Price moves it down. All right, so this guy, if it is, imagine you holding a plank, for example, that is curved like this, right here. Imagine you holding a plank that is curved like this. Imagine you holding a stick. Remember our example of the trap that farmers or hunters would use. Imagine you holding this, and then this price. Imagine you setting a trap for a mouse in your house, and then it gets in here, and then it is released from here. What happens? It slaps it right down. That's it right there. So let's see what will play out. Our bias for BTC is bearish. We've explained that thoroughly in many videos. So our bias, you can already see that it broke this level. We explained it. And then will it have the energy to climb into this yearly arc? No, we don't see that happening. We don't see that. So we expect that BTC will begin to, drip, begin to fall between Monday, Tuesday, and when it gets into Wednesday and it's still struggling, then we see that this guy standing by this quarterly this quarterly angry act standing by will say, I will release all my venom, all my anger on you, price, and price you have to drop. So that's what we're hoping to see. So we don't have much to say here. Just watch as price play out. This consolidation is just to hold up for a while and then drop. Now let's show you liquidity zone. Liquidity zone. Okay, so our liquidity zone says that it's still hanging on to this golden zone after it had crossed it, and then the arc showed up. So it's still hanging on here until it drops. That's what we're seeing. BTC, our bias is strong that it has to drop. Look at that right there. Please keep that in mind as you trade smartly, wisely. Let's check the confluence. Let us check confluence. What does the confluence say? All right, people, look at that. Look at that. Confluence says there is huge liquidity here. All right, can you see that? Confluence says there is big liquidity. You see why our bias is very strong on a sell. There's liquidity here. So if this price struggle get out here, and we expect it to be interested in this liquidity by the end of the month, which will also be the end of the quarter. It might just be holding on until the month ends. Can you see that? Might just be holding on. This is where the month will end. This is the last angle for the month. It might just be holding on. Price was pushed down. Our bias is bearish for BTC. Price was pushed down. I mean, get below or get behind the monthly liquidity BTC so that the quarterly arc right here can slap you down. That's what our bias is saying. All right. Okay, so now we've shown you that. Is there another liquidity here for you to see? Oh no, this was our prediction chart. We told you, look at that. Look at that. Right from this day, we kept telling you this is the direction. And look at this massive fall right here. So it will consolidate a little bit here and then still be bearish. When it gets to Wednesday, we're still opening our eyes and seeing what the price is trying to do, because in the market you always have to be adaptable and very versatile. You have to be dynamic because these are massive timelines. What will it do at these massive timelines? Were there other massive timelines like that? And you can see these are three big timelines. You have the 6 months fib ratio by timeline. Remember, we flip these things and give ourselves the timeline to watch out for. You see this yearly fib ratio timeline? We look out for that, okay? And then what do we have here? The monthly. Then we have the quarterly. Then we have all of them. So we're still observing. Our bias is still very bearish, and see what we are seeing there too. Okay. And now US oil has been bullish. We told you US oil was going to fall. We saw this sharp fall. This video right here that we made, where we explained how our trading strategy covers the US oil. Okay. We mentioned how our trading strategy, we explained that the US oil price has to fall, and look at that, it has happened. Maybe we need to make a new video just to explain these again so that it stands out. We said US oil price had to fall, and it did fall, met liquidity right at the zone where we explained it will, either this zone or this zone, and that's what price is doing. We'll go into the news and explain what we understand from the news why these bullish, you can see that the bullish move was a struggle. It didn't quite go up with momentum. It was a build-up. It was a struggle to go up. What will happen to it next? US would not want their oil price to keep going higher and higher. News are coming out next week, and very important news that affects consumers, that affect businesses, that affect manufacturing companies. So we'll review that news right after we look at our technical analysis. And then what does the liquidity show? Liquidity said, okay, we already did this right there. We already show you things. We left this here because that was where we marked earlier. We also said if price gets to where all of these started, all of these war movements started, which was here, it will be a massive discount for US oil buyers. And we saw that it dropped into this zone. And that zone, if you look at the arc, you'll see that the 6 months arc is there. The yearly arc is okay. That's we'll come back. We'll come back to confluence, but let's show you the arc. So right there, we see the 6 months arc right there. We can still see that the US oil it's not going with its full chest. It's not going up with its full chest. It will still fall because US don't want their oil to keep going higher. There is a news coming up next week. Major news are coming up next week, which we are going to analyze for you. This consumer confidence news is very important for the US economy. This is high impact news, and then this inventories, job, and then the NFP. All of these major news are coming out. We'll come into the news and explain it for you. Okay, now let's go to our big boy, gold. What will gold do? I believe you already have an idea because our last video said that by Friday, we categorically mentioned it. Go and watch our review of this past week, which is this. We said gold will fall, and it fell, and it rose again. And then we said by Friday, gold should begin to indicate that he is ready to start going up. And that happened right here. Gold did say that, hey, I'm ready to start moving up. And if you look at the Gann arc, which one should I show you first? Gann arc or liquidity? Okay, let's take it in serial order. Gann arc is right here. Right there, gold pulled up out of the yearly Gann arc. So it's saying that I'm interested in going up. Will it come back and take up more liquidity? That is what one thing we foresee may happen. That's one thing we foresee may happen because this turnaround may dip in a little bit and then take liquidity, especially because the candlestick that was formed for the weekly for last week was the hammer candle. We told you that this was the handle, this was the candle that was going to form. And when this candle forms, what happens is before it continues that bullish momentum up, it dips in a little bit to take liquidity. Okay? Because this was indecisiveness at some point. Buyers, sellers, indecisive, but the ones in power, ones with the momentum are the buyers because the sellers pushed price down and then buyers took it up, created an indecision here that the price the market ended, it closed on Friday and left it at that stalemate right there. But the bulls are still very much in power. But consider too that the bears had reigned for 3 straight weeks, so they will not just give up the fight just like that. So we expect gold to dip in a little bit because of how this candle closed. Dip in a little bit. Look at it right here. You see how this candle closed the week of February 2? This price didn't just move up, it dipped in. Anyway, you see that kind of candle, price dips in a little more and then take liquidity and go up. All right, that sort of candle was here. When it ends like that, it dips into those in power, which in this case are the bulls trying to push price up to take their liquidity and go up. Now let us show you from the next arc. All right, you can see that we already drew this. Look at this. There's some liquidity here that price might come back into before going up. We will also look at what the news is saying. So Monday would open with a little dip or some dip and then rise up. Let us show you the liquidity zone that you should also look at. This liquidity zone is beautiful. Beautiful because liquidity zone shows us where price is saying, I'm trying to get out of here. I'm trying to break out of this prison. It's called prison break. Gold is when you see price angry within a liquidity zone, is telling you I want to break out of here. So expect gold to dip in a little bit, suck up some liquidity, and then go up. The same thing that we said for Monday, dip in, peak, and go. So we expect a dip in, peak, and go. Something like this. A little bit of this, and then go. By doing that, it gives itself some stability, all right, so that the week will enter with some liquidity from the previous week, all right. That is it. So what do we find in the code? Did we pass the confluence of the USOIL? Oh my goodness. I think I missed going back to the confluence of the USOIL. I showed you the confluence of BTC. Let me go there before I forget, and then I will come back to the confluence of gold. Confluence of gold. All right, so you see this confluence right here? This was the confluence. We saw the trend. We saw the liquidity. This was the confluence that contributed to price turning around. Can you see that right there? This was the confluence. What day was this? This was March 25. All right, people. So that was where price kept going. So will US oil keep sharpening its knife and piercing this, or will it go up a little bit as the week opens and then drop so that it can rest by Friday, rest on one of these confluences? It must get to them. It must get to one of them right here. Price must get, you see all of these confluences right here? Price must get to one of them. After all, price is going to them. Okay, so because this US oil is standing, what do we call this? This knife looks very pointed. It would pierce a little bit up and then drop because US oil price has to drop. That is what the confluence is saying. Now let's go back to the gold confluence. All right, gold confluence. This is what we were saying. This is what we said about gold, that we see a little confluence here. Let me use this. We see a little confluence there. And right where we see this confluence is under the quarterly last angle. So now let's look at liquidity zone. The liquidity zone, you see right under the quarterly angle, somewhere here we saw that. So price may come back in here, we suspect, and then just what we mentioned earlier, and pull out because price has fought hard. Gold has fought hard to get out of this yearly arc. So even if it comes back to smile at it and smile at the Gann arc and say, all right, there you go. I want to lift myself out of you, but I'm coming to smile at you, take the liquidity from here and then from under the quarterly and then go out. So that's what we suspect for gold. Gold is still very much bullish. BTC is bearish. US oil is still at the point of deciding to go down because the US oil price shouldn't stay too high for a long time because it will definitely affect the US citizens. So what we'll do now is to take the news. You know, we talk about the news at the end because the news is not the main thing. It is the technical structure. It is all these lines. It is all these liquidity zones. It is the Gann arc. So the news is not the main thing. So what we will now do is to consider the news, is to take the news. So now let us discuss the news. All right, so this is news time. News time at the hour. All right, just trying to imitate TV broadcasters. This is news time at the hour. Okay, so what do we have in the news? The news for usually the first week of the month, the last week and the first week of the month comes with high power news releases. And this week happens to be a combination of the last week and the first week. So the last week will take 3 days, is it no 2 days, Monday and Tuesday. That will be 30 and 31 of March. And then the the first week, okay, well, if we call it that, the first days in April will take 3 days, Wednesday, Thursday, and Friday. So usually that period, either the last week or the first week, comes out with very important news releases that can shape how the month will end up looking. So the market will guide you through how to understand the news. So first of all, Friday, March 27 at 22:30. By this time, the market had closed or was just 30 minutes to closing for the week. The US president spoke. The US president spoke in Saudi Arabia. The market has not yet reacted to these news. No. The market is gearing up to react to this news because there were some very market shaping or market affecting information that he shared. He spoke at the FII initiative, which is Future Investment Initiative. That was where FII Institute, Future Investment Initiative Institute. It's an annual international investment conference which is held in Riyadh, Saudi Arabia, and it's hosted by FII Institute. The event is called Future Investment Initiative, where they bring in global leaders, investors, innovators to talk about economy, trend, and so. So the president, United States president, spoke at that event. So what did he say? Which is why the market says that the market has not yet reacted to that news. Please excuse me. The market has not reacted to that. What did the president say? He spoke about a lot of things. He spoke about the negotiation he is having with Iran, that Iran, the impact of the war on Iran, how much they have obliterated some of Iran's plans and some of their institutions, how they have torn it apart. He spoke about Iran wanting to make a deal, and that kind of statement can move the market sharply. Okay, if Iran is wanting to make a deal with the USD, USD is strong. Okay, and then it can affect the market. He also spoke about, he said Iran sent 10 ships of oil to the US, and that statement can create demand in the market. And that statement too can affect what news will come out on Wednesday for the crude oil inventories. All right? That's what the president said. He said how US have stopped Iran missiles from hitting Saudi Arabia. He was at Saudi Arabia, so he said, hey, we've stopped many missiles from Iran coming to hit you. Iran could have hit you. Okay, so now comments like that can add momentum, can add sentiment to the market, and the market can react to comment, especially when it comes from high profile people like the president of the United States. So the market has not yet reacted to it. The market was almost closing or had closed by the time the president was speaking. So we look forward to how the market will react, both in Euro, USD, GBP, all the pairs with USD and other pairs. We hope to see how the market reacts to that when the week opens, which will be now in about an hour or so or less, the market will open. And now the president also went on to say that he thought that the US oil would be higher than it is currently, that he expected to see a bigger drop in stocks, but it didn't happen. So which indicates that the USD gained strength, which is why the stocks didn't drop. So he is projecting, from what he said, he's projecting that the USD will be stronger after the war. He called it rocket ship. USD will be stronger after the war. And so let's see how that plays out. Let's see that if that will play out with USD pulling down gold. If our technical structure, is that what will happen? Is this the target? It can happen. Is this the target that gold will slip in here into the below the 4,000 zone before it goes up? Our technical structure is still there to guide everything, but what we do see right now is that at this point gold is trying not to go below the red zone right here because it has been pulled down. And again, news, comments are sentiments. They can affect the market, they can create a spike in the market, and then the market swallows it up because of the previous momentum. If you look at the trend, if you look at our trend shows that yes, gold has been brought low. So at this point, liquidity, a lot of liquidity has been swept. It only makes sense that gold should rise. Okay? But hey, the market doesn't respect anybody. It is what the entire globe thinks about the market at a certain point that plays out. So if the market still feels okay, let's sell, well, they can sell. If if the big money is dumped here, imagine if a big bank lifts maybe $500 million and put it at this point and say go down, the market will go down. The market will go down because technical structure like we have here allows the market to move in and move out. And if you go into our confluence, right here, you can see confluences that can be targeted. Okay, confluences that can be targeted. But hey, right now it is a bullish bias that we have for gold. News are sentiments. We strongly align with our technical structure. They are the backbone of the market, the technical structure. And then the American president said that more Americans are working today than in previous years. You know what news can affect that? Look at this. You know what news can be affected by that comment? Look at this. Job openings. JOLTS job opening, non-farm employment change, and then on Friday, initial jobless claim on Thursday, then on Friday, non-farm payroll. All right, so All the important news that will come out on Tuesday, Wednesday, Thursday, Friday can be affected by the comments that he made. He spoke about building production plans, all right? Building production plans. Manufacturing PMI can be affected by that news. All right, yeah, and even the jobs can be affected. So if you build more production plants, it means you've hired more people. So jobs can be affected by that. Jobless claims can say, all right, you know what? Less people are having jobless claims, for example, if it goes that way. And then the president spoke about cryptocurrency, America being the crypto capital of the world, that they have the America is prepared to dump millions of money into cryptocurrency because that is what where the world's attention is. And then AI, spoke about AI. So that's just a brief overview of what the president spoke about on this day, Friday, March 27. So that speech will affect the market in some way, which is why the market sees that price for gold will dip in a little bit just to fulfill the requirements for the technical structure and then aligning with the news that we just heard. Look at our arc here. Where is it? Our arc here, which is why we feel okay, price will dip in a little bit and then sweep liquidity before its upward ascent. That is what we see there. Okay. And then, all right, today, Sunday 29, the president will speak again. Huh? Interesting. I did not see this yesterday when I was looking at the news. So he will speak again. The one I saw was Fed Powell speaking. So that means in the next few minutes, or yes, in about an hour, he will speak. This is 11:30. This is 23:30. 11:30, the president will speak, and we are at 10. So about an hour, less than 2 hours from now, the president will speak. So he will speak twice in one weekend. It will definitely affect the market. His speech is high importance. And then on Monday, Fed Chair Powell will speak again. So before any news will come out, sentiments will have taken a bigger portion of the weekend and the opening of the week. Sentiment. News is what we call speech that people make is sentiment. What they feel could be what they feel the market should do, but it carries weight, especially when it comes from high profile people, the president, the Fed Chair Powell. You remember how we analyzed the speech of the Fed Chair? When was that? Last week we analyzed the speech that was made by the Fed Chair right here on Saturday 21, and it definitely affected the market. Remember when we analyzed it that he accepted a prize, a nomination prize, the Paul Volcker Awards, and that speech affected the market when it opened on Monday. We showed you, we explained it to you. Go and watch this video. When was that? This analysis. You can watch this analysis, gold and Bitcoin prediction. We explained it right there. We'll not go into that. So again, the two of them, very powerful men, are making speeches. One have already made speech on Friday. The market is waiting to react to that. He will make another speech again today in about less than 2 hours. The market will put that speech into consideration and react to it. And then Fed Chair Powell will speak on Monday by 3:15 p.m. West African time, 3:30 p.m. West African time, and that is what that news will also affect the market. Then after that, we now have the financial news that will come out. We have consumer confidence. What is consumer confidence? It is how the level of confidence that consumers have in the economy. Now, this news is often released every 4 weeks. I mean, the fourth week of the month, which is usually at the end of the month. Now, what does the market foresee? Same thing as we see here, that the consumer confidence will be low. It may come out this exact number or even lower. All right, but it will be lower than the previous. Why? We feel that the effect of the war has affected, in fact, the effect of the US oil, the price of the US oil has affected consumers. Families would say, oh, we don't have any confidence in business and economy because we're buying this at very high price because of that. So if the consumer confidence is high for USD, it means USD is strong. So right now, the consumer confidence, we expect it to be low, which if you add that to our technical analysis, it goes along with what we say that BTC will gold will dip in a little bit and then rise. It will dip in to fulfill the requirements for the speeches, and then when this news comes, it should be lower than the previous. Maybe this number or even lower, but it will be lower than the previous. JOLTS job openings. What is that? It is the job vacancies, the openings, the openings for employment. Now, if the US say we have space for employment, we have space, please come and we have space, we are ready to employ, it means that the USD is strong. All right. So a higher figure will mean that USD is strong. But look at this right now. They are predicting it will be low. And the market sees that too. We foresee that it will be low because we expect that. Now, again, this news is often released the first week of the month, so it tallies with what they are releasing. They're releasing it the last day of the month, but usually the first week of the month, which in this case, this week is like this is the first week of, even though March enters into Monday and Tuesday, this is the first week of April. Okay, so expect that job openings would be lower, which would have been the effect of the war on businesses, on being unable to open up newer spaces for jobs because they are trying to consolidate. They do not have the means to hire more. So that's what we foresee there. Then Wednesday will come. Wednesday, the ADP, non-farm employment change. This is the monthly change in non-farm private employment. Yes, this release is usually 2 days ahead of government data, the labor market. And then this release, it shows the monthly change in non-farm employment. So they are expecting that it will be lower, and we agree with that too because we are looking at our technical analysis. If gold pushes USD up, which is what we foresee from our technical analysis, how it will play out, it means that the news that will come out should align with that. The news should be low to conform with what the technicals are saying. However, even if the news comes out higher, remember the expression people always say, the market is going against the news, because it can happen. You can't bring technical analysis is stronger than the news. Technical structure is stronger than the news. All right? News must align with technical structure, but technical structure does not align with news. Technical structure stays. News can be changed, news can be manipulated, figures can be adjusted, but you cannot adjust this arc. This arc stayed here and it will stay here throughout for the whole year. It will not change position. Okay, so that's why news must always align with the technical structure. The technical structure cannot align with the news. You cannot change this confluence. Where is the confluence? You cannot move this. Let me show you. You cannot move this confluence. It stays here, it stays there. But figures for news can be adjusted, figures can be updated. Someone could have changed something and maybe could have even submitted an incorrect figure or so. So that's what happens there. Okay, retail sales, let's quickly run through these. Retail sales is how many value, the value of what they have sold, in what businesses have sold. If it is high, it means that it's it, they are doing well. Their businesses, their retail market is doing well. So what they foresee here is that it will be high. So this may also come out high, especially because there has been great demand in the USD because the war, before the war, they created demand, especially for their oil. People will travel to the US to, discuss business and buy stuff and, buy retail things. So retail sales would be higher. It was 0.2%, minus 0.2 before, projected to be higher. We believe it will be high too. Core retail sales, same thing. Manufacturing PMI, how many? Now remember, the president said that they are building more manufacturing plants, production plants. So are they producing more? Is their manufacturing higher? Remember, last week, manufacturing, this PMI is released every week. Every week, the PMI is released. Core retail sales is released third week of the month. Manufacturing PMI, is it week one? Yeah, week one. Yeah, week one. It is the jobless claims that is released weekly. Yeah, PMI is week one for which gives an idea. Purchasing managers index, which gives the idea of the entire. The purchasing managers are the first people to know the data of the company, how it is going, and so they can give data that shapes how the entire month will turn out to be. So they're saying that it will be the same. Do we expect that in the market? We expect that it will drop a little bit. It will be lower than this figure that is given here. That's what we feel. And then manufacturing, yes, manufacturing industry, same thing. They're saying it will be lower. So we suspect that this will be lower. Remember last week we said it will be lower and it came out higher. So the impact should have been, they should feel it at some point. The companies, the manufacturing industry should feel the impact of the war. Even if they are building more plants, the war is still tough on them. Crude oil, considering that the president said that they are expecting 10 ships of oil from Iran, if already they've arrived, then we expect that their crude oil inventories may have risen or will rise in this news. So if it comes out higher, it means that they have oil. And then that means that when you have plenty oil, there's no more demand because it's plenty. And that's why we expect that the US oil will drop at some point. The news will always have to align with the technical. Initial jobless claims, we expect that this news that measures the number of people who are filed for unemployment, it comes out every week on Thursday. We expect that from here, it will be higher. It will be higher. Okay, yes. We agree that it will be higher because more people will still have filed for unemployment. Now on Friday, you have the holiday, you have the average hourly earning, how workers earn per hour. If it's high, it's bullish for the USD. What do we expect? Here it said it will drop. Now, because we said that consumer confidence will be low, job openings will also be low, then average hourly earnings would be low, would be lower. You can see that employment change, we said it will be low too, so it will affect this. Now, non-farm payrolls, we expect that non-farm payrolls should be lower. It should not get up to this number. Yes, non-farm payroll should not get up to that number. From minus 92 shouldn't rise up to this because of the war is still, whether it's coming down or not. Unemployment rate should also be lower. No, should be higher. If non-farm payrolls is low, then unemployment will come out higher. Then the services PMI. Services PMI felt the impact of the war because it came out lower. What we predicted last week, it did come out, and it should still remain a bit lower. From 50 and above, it means the sector is doing well. So we expect that it should have also dropped a little bit. So we expect it to still come out lower than this 5.1. that is here. That's what we expect for that. The services sector is also, is another word for it, is the non-manufacturing, because they do not manufacture, they simply provide services for the people. Thank you very much, people. That's how far we can go with the technical analysis and the news. Follow us on this Telegram channel, because what we do every day is to give detailed buy and sell locations following our analysis. Our buyers, this is our Telegram channel, Woodware Markets. Find Woodware Markets and join, and then you will receive all our daily analysis. Finally, what we'll say is gold is bullish after it will drop following what President Trump said this past weekend and will say today, and the technical structure showing us that price has to dip in a little bit and sweep liquidity and laugh at the yearly Gann arc. We expect price to come here and laugh at the yearly Gann arc and do it like this, sweep it a little bit, or maybe even laugh at it here and then go on. We'll see how the market plays out. Please follow us, like, subscribe to our YouTube channel, share, comment, and like, turn on notifications, and you receive our videos every week. Until we meet you again, thank you very much for staying with Udwe Markets. Our bias for gold is bullish. Our bias for Bitcoin is bearish. Our bias for US oil is that it should drop after this little momentum, struggling bullish momentum that it is on. Thank you very much. We appreciate you for spending your time with us. We hope you got some value for it. Thank you. Until we see you again, stay happy and bye for now. We are Urwe Markets.